If you are only watching the retail crypto markets, you are missing the largest generational wealth transfer in modern financial history. The real money is moving quietly, hidden inside institutional data streams. Behind closed doors, the United States is deliberately migrating its highly regulated financial infrastructure directly onto the blockchain. During the 2021 bull run, retail investors watched Hedera's price momentum stall out due to massive supply unlocks. While many wrote the network off as a failed experiment, institutions began a period of aggressive accumulation. The math today looks very different. A total of 86.6% of the circulating HBAR supply has already been released into the market, which effectively neutralizes the inflation threat that previously held the asset back. With that supply shock out of the way, Wall Street is stepping in. We're breaking down the exact network architecture these giants are using to monopolize Hedera before those remaining tokens are gone. The era of speculative retail trading has transitioned into a ruthless phase of enterprise utility, and the blueprints for this transition are already in motion. Wyoming recently provided the first clear proof of this shift by launching the Frontier Stable Token, or FRNT. This is the first state-issued stablecoin, a digital asset pegged to the value of the US dollar in United States history. The network selection matters as much as the currency itself. The Wyoming government is actively utilizing Hedera's ledger to secure a state-regulated financial instrument. This launch signals a wider trend. While federal regulators delay their decision-making, individual state governments are circumventing those roadblocks and adopting enterprise-grade ledgers right now. A sovereign U.S. state selecting Hedera provides a powerful regulatory signal, clearing the path for private institutions to follow. While domestic launches prove regulatory viability, the network's true capacity is revealed through the mechanics of borderless global liquidity. Tether's Unified Liquidity Protocol, USDT-0, is now officially live on Hedera. This integration runs through LayerZero, which is an interoperability protocol that allows different blockchains to communicate and transfer assets without specialized intermediaries. As shown in this map, this connects Hedera to $176 billion in cross-chain stablecoin liquidity, linking HBAR directly to massive capital pools. This setup achieves seamless interoperability without relying on wrapped assets or vulnerable third-party bridges, historically the primary targets for exploits. To track these institutional money flows as they connect to new networks in real time, make sure you hit the subscribe button. Financial institutions will not risk capital on infrastructure that relies on unproven security. Removing bridge vulnerabilities is a mandatory requirement for Wall Street to move its assets on-chain. The end target for this unified liquidity is the traditional foreign exchange, or FX market. This is the global system where national currencies are traded, moving $8 trillion every single day. We are already seeing the early signs of this migration. The total stablecoin market cap has reached $312 billion, with non-USD stablecoins beginning to capture market share from traditional fiat settlement systems. Handling this volume requires specific network properties. Hedera's fixed fees and real-time settlement make it a candidate to serve as the ledger for these massive daily clearing operations. I'll be breaking down which specific non-USD stablecoins are driving this volume over in our Telegram channel and in the YouTube community tab, so check the links below. At this scale, Hedera is no longer competing with other crypto networks for retail traders. It is positioned as a direct alternative to legacy FX clearinghouses. Legacy clearinghouses are paying close attention. HederaCon 2026 has confirmed participation from the highest levels of the traditional financial sector. Major participants are officially locked in, including massive legacy institutions like Citi and Ripple. The list also includes the DTCC, which is the central clearinghouse that settles $3.8 quadrillion in securities transactions annually. This organization essentially serves as the backbone of the entire U.S. stock market. For an organization that settles quadrillions of dollars annually, presence at HederaCon signals that the legacy financial world is now seriously evaluating the ledger's fundamentals for potential settlement use cases. The pieces are now in place. With inflation concerns addressed and the infrastructure for global liquidity established, Hedera is positioning itself as a regulated settlement layer for the next generation of American finance. The Hedera ecosystem is primed, and institutions are quietly securing their positions, while the public remains focused elsewhere. However, Hedera isn't the only network moving into the back end of global banking. There is a second regulated ledger currently settling sovereign bank transfers at a massive scale. To see exactly which network that is and why traditional finance is using it to route capital, click the video on your screen right now before the institutional window closes.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.